Hi, this is Paul from globaltradingsoftware.com, and this is a Forex trading tutorial. I'm going to be using two of our indicators for this trading tutorial because there are certain times of the day for certain Forex pairs which are quite volatile, and we can look at those. So first of all, we're going to look at the xBrat range breakout indicator. We're going to look at Australian dollar, US dollar. Now the range breakouts we use for currencies are on the 10-minute time frame. So really, Australian dollar, US dollar, we do look at that Australian stock market open, that first 10 minutes, and define that range and look at the bias for that range. And then we can also look at when more Forex traders become active around about the gold European Open and the London Stock Exchange Open. And then secondly, we're going to look at how to manage these trades using the manager. So first of all, up on the left, you see ASX. This is where the Australian Stock Exchange opened. Ignore the times. I'm in Europe. Obviously, the times are different. It's 10 a.m. Australian time, which is midnight my time. We get that opening range for that 10-minute candle. Even though the candle is green, the bias is red. How do we know that? First of all, the ASX, I've put that in manually, the actual word ASX. I could call it something else, or you'd look at the Nikkei Open and that sort of thing. You can change all of these wordings, but the main thing is automatically the label is coloured in red. So you're only looking for short breakout trades. That's it with this Australian dollar, US dollar Forex pair. As you can see on the next candle, we had the breakout to the downside. You can also see that the range that's been defined is in red as well. So that gives you that second opportunity, because it may not trigger straight away. As long as it remains red, you're looking for that short breakout. And it did, and it went down quite a long way. Then we started to move up here. So the manager is this, we have this bias cloud. It works different to the bias cloud. The bias for the range breakout, you can see here, it doesn't turn green until this point where we got amber in these here. But this helps you manage. You can see the dots up above, these are higher than average volume moves down. Then we start to run out of juice with lower than average volume. It starts to come back up. Two options here. Once we've had a parabolic move, you can change the manager. It's on day trading moderate at the moment. I can change that to day trading aggressive, because when we have a parabolic move like this, so we have 1, 2, 3, 4 down candles, 3 of them are red, 1 of them is cyan, but all higher than average volume. That's a big move down. That's parabolic. So we use that. For me personally, I then change the manager to day trading aggressive. So what happens is you see this turns green at this point, but that is 4 candles ahead. If you can see live on the right of the chart now, that's actually 4 candles ahead. So we count 4 candles back, 1, 2, 3, 4. That's where we would take our profit at that point when the cloud turns green. Or you could wait just in case this runs out of juice and comes back down again, which it does sometimes, and wait for that first higher than average volume green candle. So we've taken the profit on that first trade. It's a great trade. It works, and it does exactly what it says on the tin. We define the range. We say, the software says to you, only look for the short breakouts, and it did, and it worked. The manager worked to maximize those profits, because on this little pullback here, we didn't panic. It came back down again, and we were allowed to take more profit. Then we go into the European Gold Pit Open. Now, again, this is where a lot of European Forex traders become active at the 8 a.m. European time. Again, we've defined that range. The label is in red. We're only looking for those short breakouts. As it did, it broke out down to the downside, but it really waited for that London Stock Exchange Open, which again, the range is defined. It's coloured in red. We are only looking for the short breakouts, and that's where we are right now. We should still be in this trade right now. So there's continual trading opportunities. If this later today comes back up and tests this range, and we've taken profit, and the range that's defined turns green and it breaks out to the upside, we'd be looking for long breakout trades further on in today's trading session. So it's not just that initial opening range, it continues during the day. For example, if this first trade, it was a great trade, sure, if that continued to come up through this opening range, and the opening range, see how it changed to green here? If it came up through and broke out to the upside, we'd be going long Australian dollar, US dollar, but it didn't. It came back down. We've got two more opening ranges which are poignant points within the Forex 24-hour period. So the gold pit open for Europe, the London Stock Exchange open. There's a lot more activity, a lot more data coming out. The same with the Australian open there. Obviously, US dollar, Japanese yen, you could trade on this as well. If you're looking for euro and the GBP, you would probably look at these types of opening ranges as well. So it's a great tool. Right now, there's been two trades in the last 24 hours. We've got one from the range breakout from the Australian Stock Exchange Open. It does what it says on the tin. We got the red label, we got the range defined in red. We're only looking for the short. We traded short. We've got the manager, then the cloud turns green. At this point, we take the profit. We're coming into the European Open, define the range. The label is in red. We're only looking for the shorts. We go short. London Stock Exchange Open, we define the range. The label's in red. The range is in red. We're only looking for the shorts. And the manager is keeping us in right now. We're still in this trade. Even on the aggressive setting for the manager, we're not panicking. The idea is make it risk-free, but just let it run. Let the manager tell you when to get out of that trade to maximize your profits. Hopefully this has been helpful for the Forex traders. This trading indicator suites are available for TradingView and MotiveWave. They are coming for NinjaTrader and a few other platforms as well. So keep an eye out. Check out the links in the description below, because the links will be there, and you'll be able to register your interest for the NinjaTrader when it comes out, and we can let you know, that sort of thing. And obviously subscribe to this channel. Lots more. I've made over 1,000 of these educational videos, lots of different Forex pairs, futures, stocks, that sort of thing. I'm there to help you understand the strategies and make them simple and give you them in lots of different market conditions. Hopefully that helps. Speak to you all very soon.